Hello, everyone.
Hold it. Let's wait a few minutes. How many? Only four. Let's see.
Okay.
Wait a minute. Nine.
Welcome, everyone. We're just giving a few more minutes for those to dial on. Thank you. Okay, welcome, everyone. Thank you for attending the Independent Contractor or Employee Do You Know the Difference webinar, brought to you today by SCORE Staten Island. My name is Gina Trondo. I'm co-chair of SCORE Staten Island, and we present today's workshop free of charge thanks to our partner Flagstar. Special thanks to Karen Hall from Paychecks, who's delivering today's workshop. This is, I think she said, the third time. So this is a topic that we're presenting based on popular demand. Next slide, please. So a few rules about today's webinar. All your lines will be muted. We will have Q&As at the end. So please, all of your questions, please put in the Q&A box versus the chat. Please keep your questions general, not specific. We're here to educate you, not really answer specific detailed questions. A copy of these slides, along with the recording, will be sent to all attendees. And at the end, there's a brief survey that will be sent to you. We ask that you please complete that, give us your honest feedback, because that helps us generate better content for the future. So without further ado, Karen.
Thank you, and welcome, everybody. I'm just going to put it out there before we get started that this is a new environment, right? I'm working from home now. You might hear my big bad dogs in the background. They like to bark when the mailman or FedEx or somebody comes to the door. So they're fine. They just like to be noisy. All right, so I'm going to stop my video so I'm not distracted looking at myself. And we'll jump right in. So independent contractor employee, how do you know? Got to cover the legal stuff first. So a quick legal disclaimer. This Paycheck seminar is for general information purposes only. It should not be considered legal advice or interpreted as legal opinion of any specific facts or circumstances. We encourage you to consult with legal counsel concerning your own situations or for any specific legal questions you may have. Independent contractors and employees are not the same, and it's important that you, as a business owner or manager, understand the differences. In the early 1900s, Congress adopted the employee independent contractor distinction to define the coverage of New Deal era statutes that were designed to protect workers. Employee versus independent contractor status determinations have frequently been the subject of litigation, as well as regulations and legislation ever since. Where legal rights and protections are concerned, the difference between employees and independent contractors in American tax, labor, and employment law is monumental. Employees are protected by numerous statutes, such as state workers' compensation laws, the National Labor Relations Act, unemployment insurance laws, anti-discrimination laws, and wage and hour laws. Individuals may not be covered under employment laws where they do not meet the definition of an employee under an applicable law. Determining whether a worker is an employee or an independent contractor is not an easy thing to do and should not be taken lightly. It is further complicated by the fact that worker classification may be defined differently under different laws and enforced differently by different government agencies. A worker's classification potentially affects payroll, wages, taxes, and who's responsible for paying those taxes, eligibility for workers' compensation and unemployment insurance benefits, eligibility for company benefits, and protections under federal, state, and local laws. So what are we going to do? Today, we're going to review applicable definitions of employee and independent contractor. We're going to talk about the business owner's responsibilities. We're going to give a great big overview on determining worker classification, go over some common misclassification concerns and consequences, and then review those common mistakes that employers make. So the first question, what is an employee? The determination of a worker's classification cannot be made based on any one factor, as different agencies use different criteria. The U.S. Department of Labor, or the DOL, applies the Fair Labor Standards Act, FLSA definition of employ, which is to suffer or permit to work, and the economic realities test to determine whether a worker is an employee. The Internal Revenue Service, the IRS, generally considers anyone who performs services for a business to be an employee if the business can control what will be done and how it will be done. This is still generally the case when an employer allows a worker the freedom to make certain decisions and act upon them. The IRS maintains that the employer still retains the right to control the details of how that service will be performed. In an employer-employee relationship, the employer is responsible for withholding income tax and a portion of Social Security and Medicare taxes for employees. As an employer, you must also pay Social Security, Medicare, and unemployment taxes on the wages you pay to your employees. Most employers have to pay Social Security and unemployment tax and provide workers' compensation insurance to employees. Employers are required to issue Forms W-2 annually to employees and report employee wages quarterly on the Form 941. Form W-2 is a statement that must be prepared each year that details an employee's total gross earnings, Social Security earnings, Medicare earnings, and federal, state, and local taxes for the employee. The form must be provided to employees no later than the end of January with information from the previous calendar year. Depending on company policy, employers may be required to provide certain fringe benefits, such as health insurance, paid vacation, paid sick time, to employees. Employers must also comply with all applicable federal, state, and local statutes designed to protect covered employees, such as wage and hour laws, leave laws, etc. So then, what is an independent contractor? Now that we've looked briefly at what the DOL and the IRS consider when determining whether an employee classification applies to a worker, let's look at what these agencies might consider when determining whether a classification of independent contractor applies to a worker. If an individual provides services to other businesses, the individual may be considered self-employed by the IRS. As a self-employed worker or independent contractor, the individual still has tax obligations to meet. People such as doctors, dentists, veterinarians, lawyers, accountants, stenographers, or auctioneers who are an independent trade, business, or profession in which they offer their services to the general public are generally considered to be independent contractors. As a general rule, if you, as the employer or business owner, have the right to control or direct only the result of the work done by the worker and not the means and methods of accomplishing that result, and the individual is economically independent from you, the employer, the individual may be an independent contractor. However, whether a person is an independent contractor or an employee depends on many factors in each situation. As a business owner who uses independent contractors, you should consider having a written agreement. You may wish to have this written agreement detailing the terms of your relationship with each independent contractor. An independent contractor agreement or contract, although neither required nor definitive for purposes of classification, might include the following information: a description of the services provided, payment for services, the relationship of the parties, work product ownership, intellectual property, confidentiality and security of information, and terms surrounding the termination of the relationship. A best practice to consider is an agreement that includes clear expectations detailing the job to be done rather than the manner in which it is to be performed, as well as a specific timeline for the completion of services. Consulting with legal counsel is recommended when drafting independent contractor agreements. Documentation and record keeping. This is also important when managing an independent contractor relationship. Keep records regarding the independent contractors that you may use for your businesses and have these records readily available in the event of an audit. To help with this, consider keeping the written agreement for services, all invoices for services, business cards, and proof of insurance in a common folder. Comply with applicable requirements when obtaining services from an independent contractor, including completing the Form 1099 at MISC each year where applicable. Business owners are required to complete the Form 1099 MIS for vendors, subcontractors, independent contractors, and others working as independent contractors when the individual receives 600 or more from you in the calendar year. State and/or local record-keeping requirements may also apply. Making the determination. While no one factor is regarded as controlling in making this determination, each enforcing agency considers certain factors when reviewing worker classification. When classifying workers under the FLSA, employers should look into the DOL wage and hour division. Investigators would generally rely on fact sheet number 13, Chapter 10, FLSA coverage, employment relation, statutory exclusion, geographical limits of the agency's field operations handbook, and the administrator's interpretation. The fact sheet specifically references the Supreme Court's past practice of indicating there is no single rule or text for determining whether an individual is an independent contractor or an employee for purposes of the FLSA, but does point out several factors that the court considers significant, including the extent to which the worker's service are an integral part of the business. Does the worker play an integral role in the business by performing the primary type of work that the employer performs for his customers or clients? Does the worker perform a discrete job that is one part of the business's overall process of production? Does the worker supervise any of the company's employees? The permanency of the relationship. How long has that worker worked for the same company? The amount of workers' investment in facilities and equipment. Is the worker reimbursed for any purchases, materials, or supply? Or does the worker use his own tools or equipment? The nature and degree of control by the principal. Who decides on what hours will be worked? Who is responsible for quality control? Does the worker work for any other companies? Who sets the pay rate? Does the worker have opportunity for profit and loss? Did the worker make any investments such as insurance or bonding? Can the worker earn a profit by performing the job more efficiently or exercising managerial skill, or suffer a loss of capital investment? The level of skill required in performing the job and the amount of initiative, judgment, or foresight in the open market competition with others required for the success of the claimed independent enterprise. Does the worker perform routine tasks requiring little training? Does the worker advertise independently online via yellow pages, business cards, etc.? Does the worker have a separate business site? Now let's look at what the IRS looks at. So the IRS common law rules and the courts generally look at a variety of facts in determining worker status. The IRS common law employee control standard groups facts within three primary categories: behavioral control, financial control, and the relationship of the parties. The important point to remember is that you must consider all the facts in making the determination, as no one fact provides the answer. In determining whether the person providing service is an employee or an independent contractor, all information that provides evidence of the degree of control and independence must be considered, including behavioral. Does the company control or have the right to control what the worker does and how the worker does his job? Financial control. Are the business aspect of the worker's job controlled by the employer? These include things like how the worker is paid, whether expenses are reimbursed, and who provides tools and supplies, etc. And finally, the type of relationship. Is there a written contract or employee type benefit in place? For example, a pension plan, insurance, vacation pay. Will the relationship continue, and is the work performed a key aspect of the business? Businesses must weigh all these factors when determining whether a worker is an employee or an independent contractor. Some factors indicate that the worker is an employee, while other factors point to the fact that the worker is an independent contractor. There is no magic or set number of factors that makes the worker an employee or an independent contractor, and no one factor stands alone in making this determination. Also, factors which are relevant in one situation may not be relevant in another. If, after looking at all those factors and you're still unsure whether to classify the worker as an employee or an independent contractor, you can actually reach out to the IRS for help. They have a form as the SS-8 determination of worker status for purposes of federal employment taxes and income tax withholding. You can complete it and you can send it off to the IRS, and they'll review the information and make a determination. Realize that this is not a fast process. This could be 6 or more months to get an answer. And I don't want to sound like a conspiracy theorist, but you are giving the government lots of inside information on your position and that worker. So I would not take that one lightly. In addition to the federal DOL and the IRS, each state might have its own regulations related to determining worker classification and different requirements for workers when it comes to different coverage that they may be required to have. So what happens if you misclassify somebody? Who really cares, right? We'll just flip it. No big deal. It is a big deal. Misclassification can result in fines as well as civil and criminal penalties for your company. That could include back federal taxes, which could be up to 1.5% of wages paid for failing to withhold the employee income tax, 20% of an employee share of FICA, 100% of your share of employer taxes, 100% of FUTA taxes, liability for unpaid overtime and back pay, and benefits and benefit contributions, but not limiting to 401k contributions. If you are found to have failed to provide independent contractors, those making more than $600 a year for you, with a Form 1099 miss, you may also face double federal penalties. If you're found to be intentionally misclassifying employees, your company may be subject to greater fines and penalties. In addition to facing fines and penalties at the federal level, your company may also face fines and penalties at the state level. Some states may more aggressively enforce misclassification than others. And I can tell you that New York is one of them that does more aggressively look at misclassification. So let's talk about some common mistakes that I see out there. Only looking at a couple of factors. So employers should not base worker classification on just one or two factors, but look at the entire situation. For example, basing the relationship on a signed contract or the fact that the worker does assignments or project for more than one company may not be enough to make them an independent contractor. Not following standard guidelines. Don't just do something because another business has done it. I hear this one a lot. The clients are like, oh, it's common practice. Everybody does it. That's not a defense, because when you're facing a fine or you're on trial or in court, that would not be your defense in front of the judge. Well, everybody does it, therefore I should be able to do it. Taking advice from friends. Remember only to take advice from a reputable source when trying to determine worker status. For example, starting someone as an independent contractor during onboarding to save on unemployment taxes because a friend did it and saved some money is not a safeguard. And where a lot of this goes wrong, as the employer, you are expected to know more than your employees. And so if you hire somebody, but then pay them as a 1099 instead of a W-2, none of the proper taxes were withheld. right? They go to file their taxes the following January, February, and lo and behold, they find out that they were never a worker. And that can cause a lot of issues. So you cannot just try somebody out as a 1099. That's not a valid reason. Going it alone, not talking to an attorney or accountant when classifying workers as independent contractors, or creating your own independent contractor agreement. I am dealing with a situation with a client right now. It's not about independent contractors. It's more about a non-compete job agreement. And instead of talking to an attorney, this is a very level high position they hired for. Instead of talking to an attorney and having the attorney draft it, they thought they could save some money. And it's worded improperly. And in it, if they sever that contract, which it was a regular employee, they didn't even need an employment contract, they're going to have to pay out a month of salary. So they thought they were being smart, taking a shortcut, and it's going to come back and it's going to bite them in the tuchus because they didn't spend the money on an attorney to get it drafted appropriately. So they can be your best friends. Not double checking documentation. Always confirm that an independent contractor has his own workers' compensation insurance. This is a big one. Letting the worker make the determination. Letting a worker classify himself as an independent contractor does not protect your business. Even if the worker signs a written agreement, the business is still responsible for proper classification of workers. I have this come up periodically, more often, I'd say in sales or in IT fields, where the worker is a little bit more educated, a little bit more knowledgeable about a 1099. And there's benefits for them since our taxes were, the tax code was changed a few years ago. Your average W-2 is not allowed to claim any business expenses against their tax liability. And so there are quite a few people that are legitimate W-2s that decided that if they are paid on 1099, then they can use all of those expenses to reduce their tax liability. Not allowed. Not allowed. It is not the worker's determination. They're not the ones that would be paying the fines, the back taxes, back pay. If you're caught, you would be. Treating independent contractors as employees. For example, providing an offer letter or an employee handbook, giving them access to benefits like health insurance, paid time off, paid holidays, leave benefits. I see this kind of often. They have a meeting and they invite the independent contractors to the meeting. Or I had one in New York not too long ago that they were doing the mandatory sexual harassment prevention training, and they invited all of their 1099s as well. Don't treat a 1099 as a W-2. And then retaining an independent contractor for a lengthy period of time, over a year. Remember, that was one of the bullet points that we talked about, was the permanency of that relationship and how integral that position is to your job. The argument could be made that if they're with you for over a year, it's probably a key piece of your business, and they're most likely a W-2. Using the wrong language. You should never refer to independent contractors as 1099 employees. They're independent contractors, not employees. Also avoid the terms hiring and firing when referring to independent contractors. Independent contractors are neither hired nor fired. Their contracts are simply fulfilled or terminated. Avoiding some of these common pitfalls can help you avoid liability when classifying workers. The conservative approach, when in doubt about a worker's classification, may be to classify the individual as an employee and comply with all applicable laws in an effort to avoid the potential back taxes, fines, and penalties associated with independent contractor misclassification. As an employer or business owner, you may have a defense or safe harbor against these fines and penalties if there is a reasonable basis for the determination that you made. So some examples of reasonable basis may include Judicial precedents, published rulings with respect to the taxpayer, or a letter ruling to the taxpayer. Past IRS audits. This is only applicable if there's no penalty assessment related to the treatment of individuals holding a substantially similar position with the business. Prior audits must have included an examination for employment tax purposes of whether the worker or anyone in a substantially similar position should be treated as an employee. Or a long-standing recognized practice of a significant portion of the industry. Employers or business owners may be denied safe harbor protections if they inconsistently classify workers who are doing the same tasks, or if the employer has not filed the appropriate tax forms consistent with the treatment of the worker as an independent contractor. Employers are therefore encouraged to treat all individuals considered to be independent contractors consistently and to file the required tax forms. When in doubt, consult your legal counsel for more guidance. So some resources, which you're going to get copies of these slides so you can have them. You obviously can use your legal counsel, an accountant, tax professional. If you're with Paychex or another service and you've got an HR business partner, HR consultant, absolutely reach out to them. But here are some websites that you can go to get great information. The IRS, their form, DOL and their fact sheets, their interpretation of those fact sheets. Those are all great places to start. So for some organizations, independent contractors may be a part of that business's success. However, worker classification enforcement and compliance with applicable tax and wage and hour laws is at the top of the IRS and the US DOL's enforcement agenda, as well as many state agencies. If anyone wants to guess why, it's about money. Your determination of whether the person who works for you is an employee or an independent contractor is an important decision that you, as a business owner or employer, must make. And you must make the correct decision, because proper or improper worker classifications can have a significant impact on the success of your business. All right, so let's look some questions. I have a funny story actually I can share, and I if anybody's ever been on one of mine before, they might have heard this one before. I had a client, and they had salespeople who they paid out their commission as 1099 and their regular base pay as a W-2. And you cannot do that. And they were telling the IRS that these people worked for them in two different capacities. So very, very scary. And I asked why. And they said, well, because that's a lot of taxes we would have to pay on those commission checks. And to me, that's kind of like, ding, 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 ding. If you're paying somebody, as a 1099 instead of a W-2 to get out of your portion of the taxes, then they're a W-2. Your motivation is illegal and you cannot do that. All right. So do we have any questions that came in?
We do. It looks like the first one is more of a comment that it's now formed 1099 NEC, not 1099 miscellaneous MIS.
Miscellaneous. Yep.
Yeah. So that is more of a statement. Here's a question. Do I have to use E-Verify when hiring an employee? What about verifying a social security number, a TIN of an independent contractor?
So you need for an employee, you do not have to use E-Verify unless you're in a state that requires E-Verify or a business that requires E-Verify. Put that out there. You're not using E-Verify on 1099s. An I-9 and E-Verify, an employer has the obligation to do two things when they hire somebody. they have to verify that person's identity and their legal right to work in the US. And the Form I-9 and E-Verify does that. You do not have to verify the identity of your 1099 or their legal right to work in the US. You do need from them either a taxpayer ID or a Social Security, though. One of those two items they have to complete. There is a W-9 form. So W-4 is for employees. W-9 is for 1099s. They do have to complete that and put that information on there.
I do know, like, what percentage, I mean, there's a lot of tax, okay? Like I said, my son has a small business and he's started, needing to hire employees. So in addition to the unemployment tax and the other city and state, whatever, federal, Social Security, all that stuff, you are mandatory to buy workers' comp, to buy the, family leave and disability and, in totality. So I will tell you, as someone who worked in corporate America, we would add, when we were doing our budgeting, under the benefits line, 24% of the salary would be additional 24% would be added to benefits. Is that a good range? I mean, because, that's a big expense for a small business to, add an additional 25% or thereabouts. Is that what you're thinking, or do you have any guess on that?
It depends on the state and what exactly you're adding into that calculation. I actually went through that exercise with a client of mine in New Jersey a few years ago, and it actually worked out to 34%.
Wow.
He also was including in that he had a 401k. And so he was including the employer. He did do a match. He was including that in it. There was health insurance, and he was including his health insurance,
Okay.
the portion that he was paying towards it. So the number is going to be more, depending on what you are offering to somebody. The flip side of that is you can't do your business without them. So
Correct.
there is a cost, right?
And I think there was also a belief that, if you had under 5 employees, like there was this, forgiven zone, right? If you had so few employees, but that's not really the case anymore, right? It's across the board, correct?
It's across the board, and it's on both sides. So I am a W-2 employee with paychecks, but I also get 1099s. I'm a swim official on the side. So I work for different school boards, and they all issue me a check through 1099. And the first year that I did that, I hate to admit this, maybe my record keeping wasn't the most fabulous, but I forgot one. And we're not talking a lot of money, but I forgot to include one when I filed my taxes. And the IRS knew. They came after me for a very insignificant amount of money. So, people should be paying proper attention to it. They shouldn't be thinking, well, it's just, me and 3 workers, so who cares?
Yeah.
You should care. And it takes one call from an employee to the DOL because they're not understanding how they're paid or how, things happen. And that could open up an investigation. That's another time that employees get confused is you had somebody working for you, paying them as a 1099, you terminate them, right? And they go and file for unemployment. And guess what? They didn't pay into unemployment, and you didn't either. And now they can't collect unemployment. So that could trigger some sort of investigation into what you're doing. When in doubt, they're a W-2. It is always the safest route to classify them as a W-2. Independent contractors should not be key to your business. I give people the example that you're renovating your office and you hire a painter to come in. That's a 1099. Or you get a special order for something and you don't have that person on site. So you get a 1099 to help with a piece of that order that you don't regularly do, but that's all they do. and then the relationship is done. Now, you may bring them back in 6 months when you have another time you need their special skill set to do that, but they're not going to be a key part of your job. They're not going to be helping your business every single day.
So how do the Ubers and Lyfts and the delivery apps get away with, independent contractor? They're using maybe not the vehicle, but the app and stuff like that. So I think that creates confusion, right, in the independent contractor area, because you see it all around you, and
And there's
after your
lots and lots.
definition,
Well,
right?
it's not settled. There's a lot of litigation out there about, are they employees
Right.
or are they independent contractors? And there's a lot of laws that are being made, to protect them. So even if you're still going to call them 1099s, there's certain, laws that are being proposed to protect them. I think ultimately they're all going to end up being W-2s, and for the protection that goes within that. The argument is that, if you drive for DoorDash, right, you can choose to pick up an order or not. You're using your own car to do that. But then the other argument, right? But that's what DoorDash is. You are DoorDash. If you don't do that job, then DoorDash doesn't exist.
Right.
So
It is, yeah. But I could see why it creates confusion in a small business, right? Like, which is the right. So is there any other questions? We'll leave it open another second or two. If you could move to the last slide, Karen.
sorry, I had 3 screens, so I was getting caught up a little bit there, trying to figure out what screen was what.
So thank you for attending. Just for those on the call, SCORE is our mission is to foster vibrant small businesses through education and workshops such as today. You will, as I said, you will be receiving a survey. We want your honest feedback to allow us to bring the best content that's most relative to our audience. So thank you, Karen, once again. Interesting subject. I know I learned a lot today, and thank you all for participating. As I said previously, these will be emailed to you as well as the recording, the slides and the recording. So Karen, thanks again. Bart, thank you. And thanks to all. Be well.
Have a wonderful day, everybody.
Bye.